Morning, welcome to End of Week Ainsley News. It's Friday, the 6th of November. Still awaiting that final call on the US election as we expected, but today we're talking why shares, precious metals and Bitcoin are all rallying. Topically, after yesterday's discussion about central banks upping the money printing game last night, the US Fed maintained its $120 billion per month QE program and indicated it has no end in sight. Powell also stressed that the recovery has a long way to go and that fiscal policy is absolutely essential here. Or, in simple speak, the US government must recommence its own stimulus or deficit debt-fueled stimulus directly into the economy, as QE alone won't save the ship. When combined with the increasingly likely chances of a Biden victory and the expectation of much more government spending that comes with the Democratic administration, everything rallied last night except for a tanking US dollar. The Dow and the S&P 500 were both up 2%, but the tech-heavy Nasdaq surged yet again, up 2.6%, continuing its recent tier. Gold was up 2.5%, or 1% on the stronger AUD. And silver rocketed up 6.2%, or 4.5% in AUD. Bitcoin was up another 8.3%, and Ethereum 2.3%. The US dollar was smacked 0.9% lower, which sees the AUD, or Aussie dollar, now at 72.8. So when the Fed says there's a long way to go in terms of recovery, and the following chart shown is a reminder that we are now just back where we got, to the very bottom of the GFC. Here we go here with US economic activity chart. In terms of shares surging last night, that might have had your head being scratched around fundamentals, particularly the Nasdaq, ahead of the potential new president, with them in his sights and already sky-high valuations. And indeed, the so-called smart money from Bloomberg's money flow index is exiting the building. This chart here showing me smart money flow. Jeff Bezos has sold over $10 billion in Amazon shares this year, albeit he's still owning just $170 billion worth. But part of him must be looking at the following charts we're going to show and scratching his shiny head. First, we have the Nasdaq surging while the S&P 500 equally weighted index barely moves, which has only happened twice before in history, and both times in April 2000, just at the peak of the tech bubble. Second, we have tech share valuations up to 43% of GDP, 26% higher than what they were in the dot-com bubble. This chart here showing US tech stocks market cap to GDP. Interesting. This sort of madness is why we're seeing gold and silver surge, together with shares, when they are normally negatively correlated. The smart money is positioning into gold and silver and Bitcoin right now. Despite the surge in shares, we've seen the critical breakout of gold to the S&P 500 ratio wedge that has been forming since the pandemic broke out. Check out this beautiful chart here of the gold to S&P 500 ratio. Lovely descending wedge there. I wonder where it's going to go next. Such gyrations are not unusual in an uncertain environment, as we currently have with the US election, and may not be particularly instructive on where we will be in days, let alone years. However, what is abundantly clear is that there is a growing awareness of what is to come under either administration, and that hard assets such as precious metals and Bitcoin are a necessary part of that portfolio, particularly if you want to play the share market casino. Well, that's news for today. All things physical, if you're wanting to jump into some real gold and silver, ainsleyBullion.com.au. Interested in cryptocurrency? Want to check out Bitcoin? Visit ainsleywealth.com.au. And if you're interested in a cryptocurrency that we've built and it's backed by real gold and real silver and stored at Reserve Vault, check out goldsilverstandard.com. We've got two tokens there, one for gold and one for silver. Well, we hope you enjoy your weekend. We might even get an election result today, or we'll probably wait until Monday. You never know. We'll catch you soon.